Alright guys, let's get started. This is Trader Dan's TD Pro Scalper. What does it do? I'm on a 1 minute time frame. This thing does a lot of things here. Preferably what this thing does is it trades the ABC swings, right? Or it marks these out. And it marks these out so you can take trades. Or you can know where supply and demand is, and you know that, hey, if we break supply, we go in demand. You know, if we break supply, we're probably going to break out. If we come through demand and break through demand, we retest it, we go short. We're going to go over how to use this. This video won't be too long. There is a lot of ways to trade this, so sit tight. Let's go through this so everybody is on the same page. Let me pull out my drawing tools here. Let me get this picture off of there. Alright, we're going to pull out the drawing tools real fast. Okay, so what do we got? We got demand, we got supply, this is demand. We build out a red box. Normally that red box is the supply zone. What is supply? That means there's sellers. And the green box down here in the lows means there's buyers. So ideally, you want to buy the low, sell the high. It's pretty simple, right? It doesn't just work out that way. Let me break this down so you guys can see on the indicator itself how you can put this together. Let me just move this up so we don't get confused. Alright, so if we run through this, I want you guys to see that there's a few key things in here we're going to look. Look backs 200, 85% quantile. You don't need to worry about this. Show bubbles, which is on the bubble part, we're looking at that's the delta, right? It's whether we have a absorption on the delta or we're breaking out of the delta, right? Whether the delta is increasing or it's being absorbed. Who is the aggressor here, right? That's what this is all about. The bubbles marks a very strong absolute delta event, whether it's buying or selling. That's usually what this means. So I check this so I can see bubbles when they pop up. Right now, we're in a market that's not really moving that much. So it is what it is, right? ATR lean, I got it at 14. Show session VWAP, you can click on it. You can put it on here if you want to. I don't really run it. Let me just turn that one off. Show opening range. You can show up the opening range. It will mark up the opening ranges and stuff. We're not going to do that right now, but you can. Why do you want the opening range? Opening range high, opening range low are usually areas of support and resistance, or also demand and supply. So, all right, let's keep going. Delta volume mode, right? There is, I got it set for 0 right now. Delta volume mode decides how the delta volume is interpreted. Whether we're coming on the buy side or sell side, what's going to pick up and what's not. There's a calculation here. Don't worry about it. You don't need to change it, okay? Then you got show destinies, right? Destinies is like a high volume or high delta price zones. I leave that one on. Okay, then we go through the look back, percentages, ATR. This is all calculations. You don't have to worry about that. Let's scroll down. Now, trend filter. This is the good part, right? Trend filter. So right now, I'm trading on a 1 minute chart, and this has got a 60-minute look back, right? Higher time frame. It's looking at the hour high time frame. What does that mean? Well, we built out a buy block, and now it's building out a sell block up here. This is the supply. This is demand. And price is trying to pull back to find buyers to go higher. Or it goes into a reversal up here and it comes down. Pretty simple, right? You could change this. So let's just say we want to scalp out. And I'm going to trade on a 15-minute. I'm going to trade on a 1 minute time frame. We're going to use a 15-minute high time frame. The EMA, I'm not going to use a 34, we'll use a 20 because I want something close. The 89 is fine. The ADX 14 and the 18 is fine. ADX is average daily index. So nothing crazy. It's just something what we do. You can plot the EMA filter on here. It won't show it, but it will produce it. Okay. Zones, pivot-based zones, support resistance, support down here. The zones, right? They're pivots. They're pivots. A right, A left, B right. Why is it only A and B? Because we're looking for C to trade a D. So we only trade one pattern. We trade this pattern. So if I get an A and I get a B, we're looking for this to pull back and retest A to go short. You get a break of B. This is a BOS, break of structure. Make sure you check out some of my other content because I have that indicator as well for the break of structure. It's called the BOS, boss. It's a really good indicator as well. Guys, you don't want to run one. You can run these individually, or you can run a series of indicators together that are non-lagging, that really put things into perspective. I trade order flow, of course, and I also trade my market shift. Market shift has been a dime in the rough. It's like, it gives you that 10-cent piece every single day, or at least it does for me. So I really like it. All right, so show zones. It's going to show these pivot points. Those pivot points are only going to be there, and they're going to be listed as A and B, right? And if it pushes up and it breaks A, then this will become A, and then they're going to look for a new B for it to come back and retest to go C, okay? So this, everything I do is really fib based. It's really based off algorithms, and I trade the shorter time frames, so I get a real good visual on what we're doing. Data series down here, input series, you don't really need to do anything. It's on MNQ, calculate on the bar close. You don't have to do any of this. All these settings stay the same. Let's just hit apply and update it. And now you see, right? Now we got a little demand zone. We swept this zone, but we came out of it, right? Now we're back in the supply zone. So how does this work? Well, it's simple. If this is A and that's B, we're looking for C to sell off, right? So we came back up into sellers. We're going good. This was A. This was probably B. And we were looking for C, and it broke out of A. So now this becomes B, and it looks for a short. Until this high gets swept, you won't know what's going on here. If we go back and look at bubbles, there's a bubble right here. It says, hey, the sellers came in strong, and then it went back against them. So this was probably a fake out or a stop run. This was a buy here on this candle, and it didn't work out. Now, does that always work? No, we're in low volume right now. The price is 10:23 my time, Mountain Standard Time. So we're in low volume, but we start looking at these dots, right? So if you bought here, you had about 40 points here. If you sold here, you made some money. If you bought here, you made some money. If you bought here or here, you made some money. If you sold here, you probably got stop ran. You know, run this back up. If you sold here, you made a little bit of money. Now this is a scalper. When you're scalping, you're only in for 4 to 10 points. You can go as much as 15 sometimes, even 20. But the idea is you're going to trail your stop right? So if I go trade here, my stop's here, and then boom, I'm in the trade. So there's not too much about this, but what I want to do or teach you is that when you have this demand zone and we're bouncing out of it in an ABC swing, remember I trade one pattern. That's this pattern right here. So with that pattern, if you're not familiar with this pattern, please go watch the video for micros, the micro trading, and go watch the macro trading. These are the true impulse of the markets. When you understand this, you win in the trading game, period, hands down. No ands, ifs, or buts about it. You win in the trading game. I promise you that. I teach it very thoroughly. There's a few videos on it. Go watch them, okay? Because you have this thing called inside swing and outside swings, and when you understand that, it makes everything else make sense. So you can see here we had an A, We pushed up, we made a B, we broke this high. We pull back in to see what did we retest. We retested the demand zone. Is this something you want to short? Absolutely not. You made a low, you made a high, you made a higher low. We're looking for a long. You got a BOS right here, breakup structure. And no big buyers came in here. But if we were looking at order flow, I'm sure we could see them. But this is a prime example. Yeah, sorry. This is a prime example on how to use this, right? We're coming out of the demand zone. We got buyers. We have an A, B, C swing. That is that move. Okay. Now, what do we have here? We have a micro move, right? We have a micro move. We don't go anywhere. It's a pullback for this move, possibly to go higher. And we sweep the high, and it comes down and it goes nowhere. What do we get? We swept the low. So now what do we have? We have a reversal. We have an A, B, C, and I'm sure there was a red box here for this A to go short. So we broke down, we retested the supply zone. Why is it a supply zone? Because we took out the previous high and price did not go up any higher. So what does that mean? They got absorbed, right? The buyers got absorbed. Buyers once did it again here, and what happened? They didn't win. They went back into the supply zone where there were sellers, and price pushed down. What is this pattern again? It's that pattern, right? Guys, that's the only pattern in this market that matters. So we put in this low. They probably had a green box here at one point. It pushes up, pulls back, pushes up, pulls back, pushes up. And what pattern is that? That's two of these, right? That's two of these. Those are micro swings. You only need one or two of these moves in one day to make money. So why would you want to do this? Well, it's pretty simple. The supply and demand zone is huge, right? You're not going to see any more because it's only on current price. All right, so let's go back. Let's go to a 5-minute time zone. Okay, you're going to get some more boxes because now we're looking out a little bit further. But what do we got? Price came down. Let's just look at it, right? Price sold off what? Out of this box. What did it do? Came back and retested it. Now, people are going to say, that's a fair value gap, Dan, because of this candle and that candle. Every third candle, we have a high, low. FVGs, FVGs. Okay, there are fair value gaps, guys, right? But let's be honest. Somebody called it a fair value gap. What it used to be called back in the 80s and the 90s and the 70s when trading came out, it was called a fair value area. What does that mean? That means it's a fair price, a fair value that sellers are willing to sell and push price lower. Down here, this is a fair value area that buyers are willing to buy and push price higher. Somebody came in here and said, oh, there's a gap between the two candles, right? There's a gap between the two candles, and now we got this, and we're going to retest that box and go short. Okay, I'll give it to you, but that's not that's not the game, right? The game is you're retesting a supply zone or a demand zone, or you're breaking out of demand zone, or you're breaking out of supply zone. You can call it a fair value gap if you want to. You can call it an inverted fair value gap because it broke it and didn't respect it. But in reality, this is where selling takes place. It's called a supply zone. This is where buyers were taking place. This is called a demand zone. And when you sweep lows, you take off the liquidity, you buy through, right? Look, there was no retest here. So if you wanted to trade this fair value gap right here, you would get burned, right? I have a fair value gap indicator. If you're into fair value gaps, I'm not saying they don't work, but what I am saying is that people have taken it, made their own ICT fair value gaps. They just took fair value areas and turned them into gaps using, this bar and this bar as a gap, or going through and looking at other bars to figure out where all the gaps are. You're looking at higher time frames, blah blah blah. Anyways, let's get back to this. So we're scalping. Now we're on a 5-minute bar, right? So ideally, you're looking for the retest in this box with a stop here. So you're in here. You're looking for, if you want to go 5 points, 10 points, 15 points, or we're on a 5-minute now, so you could probably go 1 or 2 5-minute bars, right? 10 minutes in the trade. So if you get in here, you got 5, 10, maybe it pulls back again, you get in it again. If you stay in a little bit longer, you can use this strategy and trade it long term, or you can keep it as a scalper. Scalper, you're going to be more on the 1 and 2 minute time frame. A little bit longer term trade, you're going to be on the 5 and the 15, okay? 5 and 15 really shows price really well. There's a couple other indicators you can add to this that will dominate the markets. And you're going to see those series come out where I'm using this with maybe the ABC cycle, right? And when I add those two together, it's like, it increases your odds to like 50%, 60%, other than just saying, hey, I'm going to trade these boxes. I'm looking, to get out of these boxes for money, right? And then when you add fibs to those and you use my fibs that I teach you, your win rate goes up a lot higher. You get into that high 80%. And that means that, you're losing 20% of the time and you're winning 80% of the time. So you're winning 8 out of 10 trades, which is great, right? So anyways, let's keep going. So how does this work, right? So this sweeps the low, buyers come in and price goes down and people go, what happened? That is a divergent move. And if you use the ABC cycle, you'll probably be able to see it, that it's a divergent move. Anyways, we sweep the low. What happens here? Let's discuss it. We go into an A. We go into a B. On the micro level, we took out this high. We retested this area and we broke up. Your idea here would be that's a break of structure. That's a boss. And if we were trading on a 1 minute, you would have boxes down here, and this is where you would trade. And then once we break this structure, the rest is history, right? So the pink line is POC. It's point of control. Okay, it's been there for a little while. But anyways, guys, this is a real beautiful indicator for you to use. When you see these blue dots, you either got aggressive buyers or you're being absorbed. You have to determine, are you making lower lows or lower highs? That's basically what it boils down to. Pretty simple. Pretty simple. So as always, if you hit that like and subscribe button here on YouTube, I would appreciate it. We're actually rebuilding and rebranding the channel again, and hopefully this is the last time I got to do it. So with that being said, guys, I will see you on the inside. Don't forget, it's only $9.99. $9.99 a month. And what do you get with that? You go to the website, you get everything in the website for $9.99. You get access to over 40 indicators that we've built. And you are going to find a strategy that works for you. You are going to find a strategy that you understand, and that strategy will make you money. I trade live Monday through Friday for New York. I open the room at 7, 30 minutes before the market opens on my Mountain Standard Time. And I'm usually in here till 9, but normally we hit target by 8 o'clock and I stop trading. I'm here to make money, not gamble, so as soon as I hit my daily target, I walk away. I don't sit there and say, is the market going to give me 1,000 points? Is it going to give me 900 points? Is it going to be 800 points? If I'm looking to make $500 for the day, or $300 on a day, or $250 on a day, and I'm trading 10 accounts, right? 10 it could be Apex, it could be Fund Index, it could be Lucid, it could be whoever I'm trading. But if I'm trading 10 accounts and I make $250, I make $2,500 for the day. So with that being said, I don't need to make any more money. I'm not trying to be greedy. I'm trying to be thankful for what I'm doing. And many people right now are being paid out with us and copy trading what we're doing. They feel what we're doing. I only trade M and Q, so I keep the risk very low. 2 to 4 contracts max. A lot of people are 8, 10, 12. I do DCA at times that I need to in order to not take a loss, and I know that, hey, I'm going to get a bounce in a certain area. I do that, but you can come check us out, guys. $9.99 a month. It's very inexpensive. What that does is help us build the channel, keeps paying for the content to be edited and put on the channel, and of course, you're supporting me in our education program. So, not only that, I have London Sean coming in at night, so he's trading the London session live. So for all of you that are overseas and want to trade, you got the London session as well. Some of you guys will just get our indicators and go about your day and make your own money. Hey, that's great too. More power to you. But cool deal, right? So, all right, guys, hit that like and subscribe button, and I will see you guys on the inside. Thanks for watching, guys.